Now, this is on our main website, guys, kogocapital.com. You can go there and check it out. This is what we call the lending sweet spot. This is the sweet spot that I personally buy fix and flip houses and buy rentals. This is the sweet spot that we originate mortgage loans nationwide. And it is also the sweet spot that you should have a very disciplined approach to also staying in this box, whether you're buying and fixing and flipping, buying and holding and renting, or if you are lending. Now, I had a conversation a few weeks ago with a client who wrote a loan, didn't tell me about it, didn't ask for my help in any way. And when the whole thing goes sideways, she decides to give me a call and ask for help. And I said, why didn't you call me when you were originating this thing? She said, because I know you would have told me no. Well, why do you suppose I was going to tell you no? Because I would have anticipated this was happening because you were in a junior lien position on an industrial property. That's a terrible loan. But Lee, they were paying me 15%. Guys, interest is only earned if it's paid and collected. If they can't pay or won't pay, you got nothing. So we are very disciplined in our approach. Now, for those of you that don't know, I'll give you the background story in 60 seconds or less. In 2004, I had an opportunity to start developing very large luxury ski-in, ski-out homes in the backside of Park City in an area called Deer Valley, Utah. And so me and my partners, we were building 14,000 square foot homes to do what was called fractional ownership. And so we were building these $20 million homes and then we were selling them in 1/9 shares. And so we started our first one, started breaking ground on our second one, acquired the lot on our third one, and then we came to market July of 2008 to start selling shares in our first house. And as you guys know the story, Bear Stearns went down in August, Lehman Brothers goes down in September, and then the whole financial house cards in October of 2008. And it was about 18 months after that, it was Obama. The first thing he did is he came out with the cash for junkers or cash for clunkers. If you guys remember this is a way to spur the economy back in 2009 because auto manufacturing was just getting destroyed. And so they said, bring us any piece of junk clunker and we'll give you a $4,500 credit to buy a new car. And so people were going around and combing junkyards to find these pieces of crap and bringing them to the dealerships. And it worked. It spurred a lot of things. But then they came out with another way to get the economy rolling. And they pumped in about $300 billion into Fannie Mae, Freddie Mac, and FHA and VA for first-time homebuyers and FHA-financed purchasers. The criteria of the types of homes they would lend on are these. There was no bailout for the guy building 14,000 square foot luxury ski-in, ski-out homes. There was no bailout for the guy building industrial properties or warehouses or storage facilities. There was no bailout for people that owned large multi-family commercial properties. The only bailout was on these because this box represents 80% of the buying public. So if there is a recession, if there is a downturn, if there's any type of financial turmoil or upheaval, both domestically or globally, and the government has to inject funds to get the economy moving again, they're always going to provide funding on this product, none other. Because this serves the greatest number of people in America. 80% of the buying public can qualify for this home, okay? So this is why it's the home we lend on. It's the home we flip. It's the home we hold for rentals. It's the home that we buy a note against. And if it doesn't fit in these 5 criteria, we don't finance it, we don't lend on it, we don't touch it, we don't look at it, and neither should you, in my opinion. Now, well, Lee, there's people out there doing billion-dollar. Yes, there are. But I can tell you, for every billionaire that you meet, their story, getting started, growing, scaling to their first million, 5 million, 10 million, was on that house right there. Full disclosure, I've developed property. I've got a 7-Eleven that I'm building right now for $11 million, okay? But I always come back to this because this is what bailed me out of the 2008, 2009 recession, is when I got very clear about what the market needed. And what the market needs now and continually and always will need is affordable housing. And this box that I'm giving you guys is affordable housing. And so if a borrower defaults on a note that you've bought, big deal. We're going to foreclose, we're going to take it back, and we're going to put it back out of the market because 80% of the market can finance and afford that property. And if you're buying notes or doing deals on anything else, in my opinion, you are setting yourself up at great risk. You're putting yourself in a very risky position when you stop following this recommendation, okay?